Hi, I'm Abe Finkelstein with Vintage Investment Partners. And I'm panicked about traveling again, but not why you think.
Shalom, Knut.
Hey, shalom.
Why do you think I said shalom?
Because I think we have a guest from Israel today.
Dude, I can't stump you anymore.
I know.
Usually you're not listening. You would have said, do you have somebody from the Arab Emirates on today? But no, because you're from Norway and I don't know, you're just a linguistic. You knew that was Hebrew.
I did.
Do you speak any other Hebrew words?
Schmuck is one.
No, it isn't. That's Yiddish.
Oh, that's Yiddish. I'm
You're
sorry.
making our guest laugh. He's not supposed to be on. Schmuck is not Yiddish.
Okay, well,
I mean, sorry, schmuck I think is Yiddish, but our guest will confirm that.
Yeah.
You've already insulted him, so
the
I hope he
only
hasn't
other
hung up.
word I know is schmeckel.
I think that's also Yiddish.
Yes.
And they kind of mean the same, as does every word in Israel. Shalom even means schmuck, depending on how you say it. That's the beauty of Israel. I just got back, as you know, and I did not get to meet with our guest this time. But let me tell you a story.
Yes.
And maybe we'll run out of time and our guest will have to come back. But it's a
fallen
good
asleep by
story
now.
because this is how I met them. So I'm in Spain. No, I'm in Portugal. See, this is the thing. I can't even remember where I was. And this is like 3-4 years ago at a mobile conference. Oh, you know what it was? The night that Trump got elected. So you can't forget that stuff. Anyways, I'm a speaker on stage. And I'm just piling food into my mouth. I still don't think I was riding yet. So I was rather heavy. So I was just snorkeling food, getting my money's worth in Lisbon. And this guy taps me on the shoulder and goes, I like how you think. And I said, oh. And we talk. I live in Israel. And he says, his name's Alan Feld. And it comes up that, and he says, well, and I said, he goes, where are you from? I go, from Toronto. He goes, I'm from Toronto. I go, Alan Feld. I said, I know the Felds. I said, do you have a brother, Brad Feld? And he goes, yes, that's my brother. So it turns out I was best friends with his brother growing up in Toronto. Alan had moved to Israel, the older brother. Their father had passed away. It was the first time someone's father in our elementary school had passed away, so it was very traumatic. I don't know the full story because I forget things, but Alan had moved to Jerusalem, and I only had met Alan maybe once as a kid or whatever. You know, when you're kids, you don't meet the whole family. You just run around the park and stuff. Anyways, how small a world is that? Turns out Alan and our guest today, they started Vintage Funds, which is based out of Israel, and they are a $3 billion fund of funds, growth fund,
Wow.
secondary fund, and they've been doing this since before time. And it's funny because when I talk about Israel, I talk about entrepreneurship and technology. Well, part of that system is how do you get capital? And so there is a whole system built through Alan and our guest Abe that is an investor in this. So they've built up this whole, financial ecosystem in Israel. And it's something that's inspired us at Social Leverage, as I've talked to Alan over the years and pitched them our funds because they invest in other funds and they're not LPs of ours, to say, their model is interesting. So I wanted to have Abe on the show to talk about vintage, talk about Israel, talk about growth, talk about tech market, talk about how all this stuff works and money filters down. So let's bring him on. Abe, you're on. Did you know that story? Have I bored you with that story before?
Well, first of all, I have to say I'm super impressed with Knut's Yiddish, which again that's a nice one. But I have to teach you some more words after this.
Awesome.
Can you teach him a couple swear words? Because he's only we've been at bars and he goes, Howard, why don't you say this to that girl? And it's a cuss word in Norwegian.
No, those were good.
He only shares cuss words in Norwegian. But schmeckel is Yiddish, is it not, or is it a made-up word?
Yeah, no, you were right. I think schmuck and schmeckel are Yiddish, and it's the same thing. But maybe it is made up. Who knows? We'll have to figure that out on another podcast.
Do you speak Yiddish?
I don't. My grandmother spoke Yiddish, and my mother understands Yiddish, but I never picked it up aside from the curse words.
It really did die. I was forced to learn that with French, Hebrew, English, and Yiddish was thrown in when I was 8 years old. So imagine my delight of trying to learn 4 languages. And today, the only language I wish I spoke was Yiddish. Probably the funniest most interesting dead language now. It's a shame because I grew up hearing it and laughing. I think part of my sense of humor was just hearing my uncles and my mom speak Yiddish.
100%, 100%. But by the way, I kind of feel that with Hebrew is now that I've sort of learned it over the years, that it's this language that actually very few people speak, even though as many people know Israelis are sort of pervasive around the world. There's not that many speakers of Hebrew.
There aren't. And even when I was here with Yaron and all the VCs and founders in Tel Aviv, they just spoke English naturally, even though I was probably the only American in the room. Yep. All the Israelis were just talking English.
Yep. So you asked me if I knew that story. I think I remember that, that was your original connection, and I definitely have a very, very soft spot for Canadians. So, because of Alan and, of course, because of you as well. But it is an amazingly, amazingly small world.
Amazingly.
That's for sure.
How did you connect? So you've been in Vintage 18 years. So, Goldman before that. So how do you connect and end up back in Jerusalem / Herzliya / Tel Aviv? How do you end up back there? And that's a long career, 18 years. What is it about the business?
Yeah. I mean, if we go way back, I basically started my career in the mid 90s on the public equity side, but I had gone to school for a year at university in Israel, then finished my degree in the US and wanted to combine my undergraduate degree of finance and being in Israel with doing something connected to that. And that was before Startup Nation and technology, and even that, Israel is known for venture capital. So I actually found a guy in the town where I grew up in Baltimore who was a stockbroker that I like to joke, I'm not sure if they exist anymore, writing newsletters to his clients about Israeli shares traded on NASDAQ, because that's where the best Israeli companies go public. I joined him as an unpaid intern, to the dismay of my parents, moved back home with them. But as technology became more popular and as Israel became more popular, we were actually hired by another investment bank to be their equity research team covering Israeli shares. And then I kind of went during the 90s from bank to bank to bank, ending up with Goldman Sachs, which was effectively the dream job, and their equity research team. And with them moved over to Israel. And this was in
so Goldman moved you to
2000.
Israel.
Exactly.
And you were like, I can meet a Jewish girl. Because that's going on right now. I saw like 4 young VCs from the States going, I'm here to meet a Jewish girl.
That's right.
I'm opening up an office. And the Israeli girls don't want these American kids. That's what I'm hearing.
Shout out to my wife, who is Israeli.
Right.
I always say, depending on who's asking, the reason why I moved over to Israel was to, join Goldman Sachs, or it was to be with my future wife, who was my girlfriend at the time. So
that's cool.
I kind of got the best of all worlds. So
had she finished military? So you got around the military. Had she finished?
Yeah, she had finished. She was working, and then I actually met her when I was working somewhere else in the U.S., and it was just kind of the combination of that. And again, with Goldman Sachs giving me work, that I moved over to Israel in the heyday of the, if some people remember, I don't know if all your listeners remember, but the dot-com bubble. That nice.
You were kind of like crossover. It was ending as you were coming.
Yeah, so I had been there during the mid-90s watching the run-up, and I got to Goldman. I think it was literally, they hired me in April of 2000, which was literally just under the wire when it was still going up, but very shortly thereafter, it was going to have a big crash. So I got in at the right time, and that's what got me over to Israel. So it all worked out nicely. But you asked, how did I end up meeting Alan? Well, luckily for me, the dot-com bubble did burst, and Goldman Sachs decided to close their office in Israel.
Of course they did.
Right? It's exactly that when
people think that retail do stupid things, the institutions do the exact same thing.
Exact same thing. And literally by chance, I met Alan. It was interesting because his career was running in parallel to mine. He was an investment banker with Robertson Stevens, working on their investments in Israel. He then became a VC in Israel. So although we were in the same world, oddly enough, we had never met, but I got connected to him when he was getting Vintage off the ground and doing the opposite of what Goldman Sachs was doing. He was saying, okay, everybody wants to get out of venture capital. That's the time when you want to be going in. And he wanted to raise a secondary fund, which today is more well established, but at the time it was little known, buying out investors in venture capital funds and buying out investors in companies. And the whole idea really resonated with me.
What a moment that was to start doing that. Everybody wanted to sell.
Yep. So it was great timing, and I really loved the approach that Alan wanted to take. It wasn't just about like putting a discount on financials. It was really about doing deep work and deep analysis. And Howard, you know Israel, it's open culture. You can get anywhere within an hour. So it was very easy to go out and talk to all the companies and talk to all the CEOs and get a lot of information, which is really what's kind of been the ethos of Vintage ever since. It's a lot of data and information. But basically somewhere along the way where in that, end of 2002, when Alan was getting Vintage off the ground, I approached Alan after a number of interviews and said, hey, I would love to join you. He said, as soon as I get the first close done on the first fund,
Wow.
so I can actually pay you, I'll have you join me. And that happened June 1st, 2003.
So now let's flash forward, because I do this because there's no script, to today.
Yep.
Right? You guys have been through so many cycles within cycles, right? It's really just been one long boom because the financial crisis was the financial crisis, right?
Yep.
You've gone from the tech crash, which you experienced, to basically a boom.
Yep.
You had cloud, iPhone, shared economy, Web 2, now Web 3.
Yep.
And everything to me feels in real trouble. So how does it feel like to you today? Because now you are managing $3 billion.
Yep.
You have probably 50, 100 people on the team.
We have now a little over 50. Yeah.
How many funds have you deployed into in your fund to fund?
Close to 50 across 3 geographies, Israel, US, and Europe.
Yeah. You don't have to talk to anybody. You can just read monthly letters and know what's going on in the world. So how do you feel about things today?
No, I mean, your podcast title resonates with me. I would say this, that, definitely 2008, 9, 7 did have an impact. That was a downturn.
Mm-hmm.
People had to retrench. I remember talking to people then, questioning whether there'd ever be growth again. It sounds funny, right? Like, what's the next growth engine for America? Oddly enough, it was technology. But as somebody who's seen cycles, and I do think that's what's interesting about our firm, is that you have Alan, you have myself, you have other partners here that have been through multiple cycles, which, as we've talked about, that's actually one of the things that we look at when we invest in a fund. It doesn't mean that fund managers who haven't been through cycles can't be very good and have unique networks and do well, but we love managers who've seen downturns because you really have to know how to ride those out. And what I would say is, on a personal basis, I actually think the past few years have been very, very uncomfortable. We talk about our growth fund. I personally have made very few direct investments in companies. I think prices have been wildly outrageous and processes have been too quick. And you can call me old school, but
no, I call you Howie School. I've been here for 2 months saying I had an LP meeting and they were like, "Are you working?" And I said, "Working. Never worked harder," which would mean I worked hard not to write any check. And I was trying to educate people. I was always saying I'm the old guy yelling at the TV right now, the guy I always made fun of.
Yep.
But everybody is accepting prices as if there's such a disconnect in public and private markets too.
Yep.
So keep going.
Yep.
So, yep.
Yeah, I mean, so that's a good example. I mean, the public markets, they just show no mercy. It's just very easy to tell you what's right and wrong in a public market. It doesn't mean that it's not going to go too far down or go too far up, but it just corrects very quickly, whereas the private markets don't. And I do think within the private markets, at the very least now, over the last few months, we are starting to see some slowdown, some easing up. Rounds are taking a little bit longer. People are thinking twice about them, but it's still way ahead of 2018, 2019, and even 2020. So I don't think we've slowed down completely.
Yeah, early 20 through COVID, I was like, all right, I got to write a few checks. Good founders. But late Zoom era, still COVID to last year was really hard. I played golf. I traveled. I wrote. I did everything I could. And I was polite, but I was like, I didn't understand it. The thing that I couldn't explain, tell me how you felt about it. When SoftBank and WeWork, I assume you were shareholders somehow in WeWork.
Oddly enough, I don't think, we have exposure to most companies. I don't think that we had any exposure to WeWork, oddly. If the only way that I maybe can think about is maybe they bought one of the portfolio companies of one of our funds, but I think we didn't actually, but, thank goodness.
Well, it was so loved and closely held maybe that it wasn't, but I'm watching the movie right now and I'm like, when that ended, 2 things that I thought as a public market guy too is like, thank God they didn't get public because that would have hurt the public markets, even though the public markets are hurting now. And secondly, that's the end of that cycle. That cycle being SoftBank led, gun to your head, you take $300 million or I'll give it to the next company.
Yep.
But what I got wrong was that there'd be 10 SoftBanks. So how do you feel about a world where there's 10 SoftBanks, Co2, D1, Tiger? How did you feel last year when you saw that going on? Because they're kind of competitors.
Yeah, not great. I mean, they definitely are in the sense that they're, causing prices to go up to a level that, crowds people like us sometimes out of the market, so in that sense, that does compete. And by the way, it wasn't just them, it was all the crossover funds. I think most of
like
this,
Altimeter, and all the cross,
all of them, and even the Wellingtons and Fidelities and, so on and so forth. But I think all of that was attached to the public markets being open, and LPs actually getting a lot of proceeds back and then saying, hey, let's put this back to work. And I do think with the public markets down, and there are a lot of shares this year of companies that went public last year that'll come off lockup, and those shares will be distributed. So I do think there'll still be a lot of distributions this year. But I definitely think limited partners are taking a step back. These are the investors in the funds and saying, hey, maybe we shouldn't be investing as much in these funds. And maybe that'll also start to slow things down. But like I said, it was very, very uncomfortable. The other thing in managing a firm of people with different ages, we're definitely trying to build this firm for the long run, which means it can't be run by a bunch of, forgive me, 50 and 60-year-olds like myself and Al and Amit forever, is we have younger people who, as you say, have never seen a downturn. So I don't want to be, on the one hand, too preachy to them, but sometimes I also forget that they haven't seen a downturn. I'm like, wait a second, why? They see this as normal, that everything's running up. And that also was, and I can't blame them. So it's also was creating, somewhat of an uncomfortable situation in that sense. But, we deployed capital last year. We invested into funds. We try to do that as you do with the best entrepreneurs, with the best fund managers that we think will be responsible through cycles. But I think everybody kind of lost their heads a little bit over the past few years, some more than others, that's for sure. And having all these big groups replace the SoftBanks didn't help. And they're also not really going away, it seems. So it'll be interesting to see how it plays out over the next few years.
Yeah, so like you, we were investing out of Fund 4, and Gary and I were like, yeah, we like you, but we can't work for 3% of the company. We need 10. And that was just we were saying the things we thought we'd never say, but that's what happens, never say never. And here we are, as Schmuck Insurance, Gary, Tom, and I said, we're going to start an emerging manager fund in case we're wrong. Like, there's enough talented people out there, and the surface of tech has grown so much that, hey, maybe we're just wrong and we should start allocating, like we've done in the past, personal money, and let's go create with our capital behind it a social leverage emerging manager fund. So, and it's not like I hadn't seen that before. That's what you guys do, right? Yep. And so what's the number one reaction? Fees on fees? Like, what's the number one reaction when you're raising capital for, even with your track record for vintage? Is it, I don't want to pay fees on fees?
Oh, yeah. First and foremost, it's fees on fees. And then second of all, a lot of them think they can do it themselves, which again, maybe some can, but those are the main pushbacks. I think what we've been able to show with the groups that have invested with us over time is that we can actually support them in what they're trying to do in venture. Part of our model is also to give a lot of free co-invest in funds to our larger investors. So we limit the size of our individual fund of funds, but get very big allocations to funds and then turn over some of that directly to our larger investors to ultimately help them build their own portfolio. So in a way, what it does is it ultimately allows them to wean themselves off of us and our fund of funds and maybe continue with us in our other strategies. But I would say, like you said, we also have within our fund of funds an emerging managers program. We actually call it breakout funds because a lot of these managers, as you know, are coming out of other larger groups. They have track records, but they want to raise smaller funds that are typically focused on the early stage. And I think one of the ways that we play these ups and downs and these cycles is that we tend to put the money as much as possible in funds that are investing as early as possible. Because as we know, these things take 10, maybe even 15 years in some cases. So cycles are somewhat less relevant for the earliest stage companies.
So we call it emerging, you call it breakout.
Yep.
And so that fund, can you say how large it is?
So in our most recent fund of funds, that fund was 120 million, and we were we're writing checks to funds that are 150 million and below.
Yeah.
So most likely, again, there may be funds there that might be a little bit past kind of the pre-seed and seed, but for the most part, those are the funds that are doing the pre-seed and seed investing. So again, we kept it relatively tight. It has about 12, 13 funds in there or so.
And is that fund just, we're doing the same, but we're also doing opportunistic with, it's a combination emerging manager and opportunity where we'll work with some of the companies within those portfolios to bring down fees and do that. Are you doing that, or is it straight 100% to the emerging manager?
No, so that's straight 100% fund to funds. But like I said, we have this growth fund, and there's no doubt the whole idea of the growth fund is to look back into the portfolios of our funds and try to cherry pick what we think are the best companies to go in on a direct basis. So it's a very, very similar model. And most of our investors tend to invest across all of our strategies. So they kind of pick it up. They'll pick up the direct investments in the companies via our growth fund. We just don't like to mingle it across funds because some of our investors, and most of our investors are very large institutions, they like to be able to delineate what they're getting. They say, I want a secondary fund, so I'm investing in your secondary fund. I want a direct investment fund, I'm directing your investment fund.
And will the growth fund invest only in companies from within those portfolios, or can a growth company come to you and say, I know we know who you are, are you looking at this? Or does it have to come from one of the managers?
Most of it comes from the managers. The cases where it doesn't, and this is against one of our value adds, like why companies would take our money, aside from Alan being Canadian, is that we say to them, we can actually help connect you to some of the leading funds in our portfolio. So we may be talking to a company here in Israel. They've raised some capital from maybe a fund that we're not invested in. We like the company. We'll say, hey, let me connect you to CRV, or let me connect you to Andreessen Horowitz, or let me connect you to General Catalyst. And if they end up leading the round, we could then join in. So sometimes it comes, together with us. One of our portfolio funds will invest in the company. But generally speaking, we have a fund that we're invested in there, because that's typically how we learn the companies. As you know, as you invest more and more funds, you're going to start learning the underlying portfolios. And if you really like the manager to begin with, there's a good chance that they're picking the best companies anyway. So that's kind of how we kind of cull the deal flow and be able to focus, as opposed to looking at things that are outside our portfolio.
Yeah, I just feel so lucky because my job gets better.
There you go. There you go. You've come over to the fund-to-fund side. Do you see how exciting it is here?
Well, I'm 56, so Abe, you have to keep things in perspective. How old are you? Are you 50 yet, or late 40s?
I just turned 50 last week, so tell me what it's like on the other side as well.
What is it like? Well, Canute looks worse than me because he smoked as a young man, but I sat out in the sun too long. And I'm waking up with different spots on my face. I'm starting to look like Carl Icahn at this point, but 30 years younger. So tell me what it's like as an American to go over there. You have kids, and now the military is still a thing. What's it like for an American to say, I've got to conscript my kids?
Yeah, so, wow, that's a great question, pretty timely. So
because I have a podcast. I do this almost for a living.
Amazing, amazing. I don't know how you found out, but look, my daughter, my oldest of my 4 children, is 18, so she just finished 12th grade, and now she's going into the Army. She's not doing anything dangerous by any means, so I don't need to worry too much about that. So it's more of her kind of like the going away to college feel. Mm-hmm. But I would say more so for me personally is that I look at a lot of her friends, the ones of her age are now going into the Army, and suddenly life gets very real for some of them.
Correct.
So, given what's going on in Israel today as well, there's been all the
horrible
time.
Months since I've been there.
Yeah, exactly. And again, you don't feel it as much on the ground here from a day-to-day basis. As you know, business goes on, but there's no doubt it impacts a lot of families. So, I have 4 kids in total, 2 girls, and then my 2 youngest are boys, one 10-year-old, one 12-year-old. So I have a bit more time. But it's always something that's definitely in the back of my mind. But there's a lot of pluses around it. As you know, I remember, when I went off to college, and, the biggest decisions I had to make were, do I wake up this morning and go to this class or not? And again,
do I roll over my waterbed, or do I go to class? Whereas our kids are like, oh shit, where are they putting me today?
Exactly.
Yeah.
And that, by the way, I do think that also teaches you something, because you need to make, certain decisions on your own. But obviously here, when you get conscripted in the military, it's much different at the age of 18, and whether it's going into a combat unit or whether going into an intelligence unit. That's you can mature very much more quickly here than you can in the U.S., let's say. So it'll be interesting for me to see that. But otherwise, I think Israel's the greatest place in the world. So I'm very happy to be living here and raising my family here.
Yeah, I think I wrote about it. It's become obviously I can't relate because I can come and go as I please. But I would say, even though I'm supposed to tour and I do tour and I bring, Zionist type trips over there and I'm part of the Federation and we're bringing young people over, I just prefer Tel Aviv because I'm an old man and so I'm there to invest and be curious. I get to see it the way I want to see it, so people should know that. So when I call it my favorite place, that means nothing to another person who hasn't toured it and has to go see the grime and all the other stuff. But Israel's hate, the crimes are all basically around hate. And here, it's more dangerous, but it's more about insanity and freedom. It's so weird because what's there to hate, So it's a really different type of, when I read about the shootings in Israel and the stabbings, I'm like, this is all just hate. Whereas in the U.S., it's just some guy woke up and was pissed. And took it out on a random selection of people, So I don't know which is harder.
Well, yeah, I mean, look, again, we'll have to find another podcast to try to solve that. What I would say, and as you know, I mean, Tel Aviv, for example, is probably one of the safest large cities in the world. And I think that's what makes the violence here all the more frustrating because it feels like it's something that we could actually get rid of if people really put their minds to it. But again, it's not something we're going to solve now. But Israel it's a fantastic place. It's an amazing energy, and it's because of all that, and I think because of oddly enough the multiculturalism, that's why you have a lot of the startups here, and why again you have to look globally. It's a small country. We have 9 million people. Nobody's going to build a big company just based on the population of Israel. So from day one, everybody had to look globally. So I think we've done a very good job.
So let me bring this full circle. You thought globally, everybody did that. They'd go to the United States, they'd sell out. Now, Wix, Monday.com, you could go down a long list of people.
Solar Edge,
Sentinel-1, eToro, which will SPAC. There's 50 that are going to go public on their own in Israel. Is that the biggest change? Is it just from learning by doing and saying, Zoom, COVID, Slack, I don't have to sell out, I can just run the public company from Israel? What is it in the water? Is it just like Silicon Valley, 3 generations? What is it?
Yeah, I think it's a combination of things. Some of it had to do with the fact that if you go back to when we started Vintage, probably about 60+% of the capital going into startups came from the local Israeli VC funds. And today, that number is like 15%. So all the money coming into the Israeli private technology companies here is coming from the US VCs, European VCs, strategics. And you're talking about all those big names that I mentioned, and none of them are going to be satisfied with 150, 200, even $500 million exits, right? They're aiming for multi-billion dollar exits. And I really think that just raised the bar. Wix, for example, as soon as they took money from groups like Bessemer, it just raises the bar. Bessemer was not going to be satisfied with a $200 million exit. So it's not just that. I also think that the entrepreneurs, they started seeing the ability to build bigger companies. And it literally was like, oh, if my friend did that, then I can do that. If Avishai at Wix did it, why can't I do that? And I think all these things combined started to make the entrepreneurs think that they could aim higher. And let's be frank, they also started raising much, much more capital. The reason why we started our growth fund back in 2011, and it sounds quaint, is because we did a survey of entrepreneurs who exited their companies for more than 150 million, and 50% of them told us they sold them early because they didn't have access to growth capital. And now that's changed. So suddenly there's the capital to make their dreams come true as well. So it's the combination of all of that. And again, COVID, being able to do things remote. Israel was always remote. I said in the beginning when Newt said, what am I panicked about? That traveling again. I've been traveling again. I'm not panicked because I don't like traveling. In fact, I think traveling is essential to what we do, and meeting people live is essential. I used to travel from Israel almost once a month, if not 10 times a year, either to Europe and the US. And I'm panicked about traveling again because suddenly, my family doesn't like when I travel. And now I need to negotiate with them about me traveling. But I think that's what it is that now we're all getting back on the road. We're going over to the US, we're traveling. But Israel it was always the case that you could actually, build companies from here, then they would move the management over to the US. Now you're just being able to build companies from Israel. So they get a lot of money. You have entrepreneurs who want to have multi-billion-dollar exits, want to do what their friends have done, see that it's possible. And the convergence of all those things has now shown that it's possible. The next step is waiting for, the next multi-$10 billion Israeli company or even $100 billion Israeli company. So that's what we'll have to hopefully see over the next 10 years.
And is there any region specifically of the three that excite you the most, or who's in best shape?
Wow, that's a good question. I think if I had to pick one that I think might outperform, I'd almost lean towards Europe, just from the fact that I feel that it's underfunded and still a bit underfunded. The cat's out of the bag in Europe relative to where it was 10 years ago when we started investing there. But there's a lot of funding in Israel, as you know, Howard. All investors know about Israel, come over here, invest in companies, the Insights and Tigers. I think Europe a little bit less so. The U.S. is a little bit different because the U.S. I think kind of is regionally. I think they're regions. We invested in a fund in New York called Primary Venture Partners, probably going back about at least 7 or 8 years ago. And part of the thesis was that New York was underfunded. It was really a great place to be investing, and they've just done phenomenally well just investing in New York. So I do think there may be regions in the U.S. that are a little bit underfunded, but I tend, if I had to pick one right now, I probably would lean towards Europe.
Yeah, I'm writing my first checks there. I have great manager. I'll share a couple names when we get off the air that I'm backing. But I think it's based on that. As much as I don't want to be in Europe, I'm so thrilled to be in Amsterdam, though, and I've learned to break up my trip. I'm an empty nester, so I get to break up. Now I can go to Israel by stopping in Europe for a week, and I don't have the jet lag wasted 2 days in Israel. So there's tricks. Yep. So I looked the opposite of your panic with travel. I thought I loved staying at home. COVID was awesome for me. My daughter was home. My son was around. It was my last moments of time with them. Then I had to relaunch my daughter back to New York. But now I get to just come with no baggage,
Yep.
And I just was born lucky and continue to be lucky. I like to say it as often as possible so people don't think I'm an ass, because it's not my fault. I can't help it. So all you can do is kind of be nice and pay it forward. Is there a category that you like specifically? Is there anything that you just are a glutton for ideas?
I'm definitely very intrigued by Web3 and even around the kind of the gaming ecosystem, games. I think that, again, you're just seeing, fabulous entrepreneurs wanting to go in that direction, and these are massive markets. So that definitely intrigues me, and definitely within fintech. Like, I always love that area, fintech. Again, it's one of the reasons why even we started talking and getting connected, and when we were talking about companies and us doing due diligence and me reaching out to you. So I'm still very, very intrigued by that. I think the combination of how fintech is being pervasive almost across all companies and just kind of adding financial services to almost anything that you're doing, whether it's, software for enterprises, software for small businesses. I think that's very, very interesting. But there's no doubt we're seeing more and more that the entrepreneurs are heading towards things like Web3, whatever you want to call it, blockchain, crypto. And I think ultimately, where the best entrepreneurs go, that's where you ultimately get the best companies. So you better be on top of that. And we are investing in funds as well that are focused on those areas. And I imagine you're seeing it pop up more and more.
Oh, yeah. That's why we did the fund to funds. I was a lucky first investor in Multicoin. And I'm like, who cares about fees on fees? Like, I got to get my... and so I've seen the goal line, as they say. It's like someone who's been in the end zone. So what are your 2 favorite cities to visit as an Israeli now? Where do you get excited to go to?
Wow, that's a great
by yourself,
question.
not with the family, by yourself, and then we'll talk about.
You mean for work, or
for work? Like, you just get excited because I'm going to be energized. Like, for me, it's Amsterdam, Miami, surprisingly, and now Tel Aviv.
Okay.
And I guess 4th, New York, because I know New York and I have feet on the ground now, so I don't have to be there every minute. So it's Miami, Amsterdam, Tel Aviv. For you, what is it?
So for me, it's New York, just because I lived there in the past for a number of years. I know it so well. It feels like a second home to me. I have a lot of friends there. A lot of the investments that I've done are based in New York. So that's an easy one. I haven't been down to Miami now that everybody has moved down to Miami. So I'm curious from you, like, what's that like down in Miami? What's the scene like down there?
A lot of guys named Abe. and a lot of people named Finkelstein. Maybe not together.
That's right. But they're all over the age of
and
90,
like,
and they're all
come on
schmucks.
over, we'll play cards. and you and I will never say that to each other. But I think listen, I grew up a Jew in Toronto, and you went to Florida.
Right.
Jews in Phoenix go to San Diego. So there's all these different migration patterns. So I made fun of Miami for 30 years. Canute probably too. We didn't think of Miami. Did you think of it when you were living in Norway as a fun place to go? You came to Arizona.
Right, exactly.
Yeah. So I had sun, and I had fun, and I had tech. And Miami was last on my list. Hadn't been in 30 years, other than to fish. Like you land, go fishing in the Keys, and that's what I like to do. But even it got fished out in a way. So Miami meant nothing to me. And then, everybody was making fun of Rabois and Jack Abram, who I've had on the pod from Atomic, and making fun of these guys for going. I did because of Miami. I didn't make fun of them. I made fun of Miami. And now that I go, it's the funnest. It's Vegas with good food, good weather, a breeze, a beach, and smart people. It's the best of everything.
Nice. And do you think it'll stay?
I mean, will it stay above ground? I don't know. It will definitely sink. It is Gomorrah or Sodom.
Is that right? Exactly.
It will sink. It is beyond stay. It's just getting started.
Wow. Okay. So I think we have some direct flights from here over there. So I'm definitely going to have to take advantage of that. The times that I've been down to Miami, I've liked it. I've never been there for business.
Well, get busy.
I got to do it.
Yeah, I will connect. Well, you have connections there, but yeah, Miami's there. Where's the family like to go on a trip? Now, all my friends like Yaron, they go to Dubai.
Right. So I haven't done that with the family. I've done that once.
And did you like it?
Myself? Well,
is it weird?
Dubai itself wasn't interesting, but I was there pretty early after the peace accords were signed. Right. So I was just blown away by how it just felt super normal to be there, and everybody's reception was fantastic. And it was like, and again, there has been business for many years secretly, or at least under the radar, between Israel and the Emirates, but it felt amazing to go there, and a relatively short flight. So I think it'll take time, particularly on the venture side, to really develop business between Israel and Dubai, but I think it's just a matter of time.
So where will a family of six like you want to go? Italy, or where do you guys go? Spain? What is it that you guys like to do? So
my family likes to complain. I grew up in Baltimore. My parents still live in Maryland. So whenever I go to the States, we always go there, and they like to complain that's wherever. Pretty bad. That's the only place we ever go with them. So
yeah, that's
occasionally
not good
I've taken to New York a few times, and they love New York. So that was an amazing experience to see New York through the eyes of my children, which was really nice. But
have you showed them The Wire? Do they like The Wire? I mean, I think that's required. On the plane over to Baltimore, have you had them watch The Wire?
So they haven't seen The Wire. Now, the thing is, being in Israel, Israel, again, a lot of people have gone through the army, very tough culture, both women and men. It's my favorite thing to tell people that I'm from Baltimore, because 9 times out of 10 I get a reaction, "Oh, The Wire," and they must think like I'm the toughest person in the world, because that's where I grew up. Fauda. That's right. Oh, so I get a lot of street cred here because of The Wire.
Well, lots of nachas. You guys are inspiring people like myself, whether you know it or not. So I'm looking forward to breaking bread and talking some strategy around some people that we can share. But, you guys are laying down some roadmaps. Who would have thought that would have been, a tap on the shoulder from Alan Feld 5 years ago, that, I didn't know that part of the world existed in Israel, that ecosystem. So congrats for you guys for building it out. You don't care. You guys are low profile, right? So,
well, we're trying to increase our profile.
Have you ever been on a podcast?
Only a podcast that we did once. So this is really my first real podcast. So first of all, I really appreciate it. And again, Howard, sincerely, you've been a big help to us, and again, very thoughtful. And whatever, I've had some questions on anything on fintech. You've been one of my first calls, and I'm looking forward to that to continue on the fund of funds, because I'm certain we should be trading notes even more on the funds that we're seeing and the managers that we're picking, and become LPs together in a few of them.
Yeah, I'm excited. So we'll follow up after. We're going to let you go, and I want to have you back, and we'll talk about other stuff. But congrats on Vintage, and we'll talk soon.
Fantastic. Thank you so much.
It makes no sense.
What doesn't make sense?
Well, and I understand why they don't need to market, but it makes no sense that he hasn't been on. I mean, the knowledge.
Right.
I just love being able to tap that. And it's just so funny. For 5 years, I've been just like picking their brains, and they think I'm helping them. That's why I like my job. I mean, you enjoyed that, did you not?
Oh, yeah, absolutely.
And you're not into this stuff, but you enjoyed it.
No, but this is about
Lovely
strategy.
guy.
Yes, absolutely.
And, but anyways, Israel, what a place. And I don't know, it's a magical place for there to be a $3 billion fund of funds in Israel. A lot
Impressive.
of money. They just, I don't know if it's the military. No one has the true story. I think it has to do with being on guard all the time. You know, a nation of ADHD, good and bad. But anyways, that's Abe Finkelstein from Vintage Partners. Hit me up if you need an intro if you're a fund manager out there, but go look them up. Their website's great. They just a wealth of knowledge and understanding about the world of tech and the true world of tech, investing all over the world for decades. You are listening to Panic with Friends. Knut and I sit down with people like Abe, investors, founders, entrepreneurs, venture capitalists, traders, authors, that try and put people a couple steps ahead of the market so that we can ride trends and invest for profit and joy. Search my name, Howard Lindzen, on anywhere on the web, but on Spotify, Apple, or YouTube, and you will see the Panic with Friends podcast. Subscribe, and then you don't have to think. You'll get an alert once a week. Hit the subscribe button. Tell your friends. The archives are evergreen, so go back and listen to a few, and we'll talk to everybody next week.
Howard Lindzen is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed in this podcast.
It just felt super normal to be there, and everybody's reception was fantastic. And it was like, and again, there has been business for many years secretly, or at least under the radar, between Israel and the Emirates, but it felt amazing to go there, and a relatively short flight. So I think it'll take time, particularly on the venture side, to really develop business between Israel and Dubai, but I think it's just a matter of time.
So we're a family of six, like you want to go. Italy, or where do you guys go? Spain? What is it that you guys like to do?
So my family likes to complain. I grew up in Baltimore. My parents still live in Maryland. So whenever I go to the States, we always go there, and they like to complain that that's wherever.
Pretty bad.
That's the only place we ever go with them. So
yeah, that's
occasionally
not good
I've taken to New York a few times, and they love New York. So that was an amazing experience to see New York through the eyes of my children, which is really nice. But
have you showed them The Wire? Do they like The Wire? I mean, I think that's required. On the plane over to Baltimore, have you had them watch The Wire?
So they haven't seen The Wire. Now, the thing is, being in Israel, Israel, again, a lot of people have gone through the army, very tough culture, both women and men. It's my favorite thing to tell people that I'm from Baltimore, because 9 times out of 10 I get a reaction, "Oh, The Wire," and they must think like I'm the toughest person in the world because that's where I grew up.
Fauda.
That's right. Oh, so I get a lot of street cred here because of The Wire.
Well, lots of nachas. You guys are inspiring people like myself, whether you know it or not. So I'm looking forward to breaking bread and talking some strategy around some people that we can share. But, you guys are laying down some roadmaps. Who would have thought that would have been, a tap on the shoulder from Alan Feld 5 years ago, that, I didn't know that part of the world existed in Israel, that ecosystem. So congrats for you guys for building it out. You don't care. You guys are low profile, right? So,
well, we're trying to increase our profile.
Have you ever been on a podcast?
Only a podcast that we did once. So this is really my first real podcast. So first of all, I really appreciate it. And again, Howard, sincerely, you've been a big help to us, and again, very thoughtful. And whatever, I've had some questions on anything on fintech. You've been one of my first calls, and I'm looking forward to that to continue on the fund of funds, because I'm certain we should be trading notes even more on the funds that we're seeing and the managers that we're picking, and become LPs together in a few of them.
Yeah, I'm excited. So we'll follow up after. We're going to let you go, and I want to have you back, and we'll talk about other stuff. But congrats on Vintage, and we'll talk soon.
Fantastic. Thank you so much.
It makes no sense.
What doesn't make sense?
Well, and I understand why they don't need to market, but it makes no sense that he hasn't been on. I mean, the knowledge.
Right.
I just love being able to tap that. And it's just so funny. For 5 years, I've been just like picking their brains, and they think I'm helping them. That's why I like my job. I mean, you enjoyed that, did you not?
Oh, yeah, absolutely.
And you're not into this stuff, but you enjoyed it.
No, but this is about
Lovely
strategy.
guy.
Yes, absolutely.
And, but anyways, Israel, what a place. And I don't know, it's a magical place for there to be a $3 billion fund of funds in Israel. A lot
Impressive.
of money. They just, I don't know if it's the military. No one has the true story. I think it has to do with being on guard all the time. You know, a nation of ADHD, good and bad. But anyways, that's Abe Finkelstein from Vintage Partners. Hit me up if you need an intro if you're a fund manager out there, but go look them up. Their website's great. They just a wealth of knowledge and understanding about the world of tech and the true world of tech, investing all over the world for decades. You are listening to Panic with Friends. Knut and I sit down with people like Abe, investors, founders, entrepreneurs, venture capitalists, traders, authors, that try and put people a couple steps ahead of the market so that we can ride trends and invest for profit and joy. Search my name, Howard Lindzen, on anywhere on the web, but on Spotify, Apple, or YouTube, and you will see the Panic with Friends podcast. Subscribe, and then you don't have to think. You'll get an alert once a week. Hit the subscribe button. Tell your friends. The archives are evergreen, so go back and listen to a few, and we'll talk to everybody next week.
Howard Lindzen is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed in this podcast.
Archives are evergreen, so go back and listen to a few, and we'll talk to everybody next week.
Howard Lindzen is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed in this podcast.